permit me to share my screen. Give me a second. Can you see my screen now?
Yes, we can.
Okay, I'm taking it to. So the conversation today will be about trading commodities smartly. And as an intro, I mentioned the opportunities you have, the kind of returns you are exposed to if you trade commodities. So let's get into the meat of the conversation. So FX's vision is to be the reference point for commodities in Africa. And as a result, leveraging on this vision, we have built a lot of infrastructure to support the trading activities on this platform. So first, before you even think of commodities, you need to think of the key drivers, right? In thinking about the key drivers, I've used this graphic to capture all the drivers in the market. So you have your demand supply fundamentals, and that's pretty steady for pretty similar for virtually all the commodities you have, whether it's for ag commodities, whether it's for metals, whether it's for energy, it's the same thing, the demand supply fundamentals. And that means that the production and the consumption of these commodities, are we having a deficit or we are having a surplus? In the event of a deficit, what you have is the popular story you see in economics textbook. When you have more demand than some supply, you expect that the prices will rally, right? You expect that the prices will go up, which is what we've seen on a number of occasions. So if you remember the time when we had tomato prices going up because of some disease that we saw in the north, we saw people buying just 3 pieces of tomato for as high as 200 naira then. So you expect demand supply fundamentals to play out in affecting prices. And that's something investors should always watch out for, which we know will be captured in many reports that will be released discussing commodities. So the demand supply fundamental is something that drives the price of commodities. The next one is the macroeconomic condition, right? So in every country, whatever you do in any country is affected by the global economic situation. So if you have a country where the economy is not growing well, then people don't have so much money. That means that certain commodities will not be moving as fast as they are moving. So take, for instance, somebody that consumes a lot of snails, for instance. Let me use snails, for instance. If there isn't so much money in the economy, people would dial back on the consumption of such commodities, and then they go for probably fish or thereabout. So the economic condition is very, very important in determining how best people play in the commodities market. So that's one. Another one is the inflationary environment that we have. So if you have inflation going up rapidly, that also means that people will not have the purchasing power of people in the economy will reduce, and they will not be able to buy as much as they were buying. So imagine people were buying 2 bags of rice before, they will not be limited to buying just 1 bag because the prices have gone up considerably. The third one, which is climatic conditions, is very, very important to agricultural production because, if we are producing commodities, crops, for instance, maize, paddy rice, soybeans, they are affected by the weather condition. So if the weather is not good, we don't have enough rain, or there was too much heat in the environment. So if you've been following the news, you see that North America, Canada, the United States have been witnessing something called a heat wave. So what does the heat wave mean? It means temperatures that are higher than normal in that same environment, and that is causing crops to dry up. There is not enough rain in some places, and this is affecting their production. The same thing can happen in Nigeria. We saw situations where the rainfalls were not as much as we used to have last year, and we saw the impact of that on production. So climatic conditions are significant, and the impacts are very, very significant on agricultural production, especially. The last but not the least is policies. The last but not the least is policies. If you have the policies the government is implementing in favor of the commodities market, such that is not leading to a deficit, an unnecessary deficit, or is not leading to too much surplus in the environment, you have a situation where um, things are balanced. But whatever policy the government is pursuing also has an effect on the commodities market. A case in point was what we witnessed some about, I think, from August 2019 till I think November 2020, when the government placed a ban or closed all the land borders, and practically there was little smuggling being done into the country. Paddy rice prices went up, and we saw that affect the commodities market as well, because people then wanted to buy rice, and then there was a deficit in the system, and that would typically push the price northwards. So that those are the key drivers. Whenever you are thinking of the commodities market, these are things you should be thinking of. So what's the production like? What's the consumption like? If I'm buying maize today, is it in a deficit or in a surplus? Are the macroeconomic conditions good enough for us to continue buying? Are the policies in support of my investment decision? Is the climate giving my investment decision any impetus? Is it helping to make my decision better or not? So these are things we should pay attention to in the commodities market. So the next question you ask yourself is, how do I then enter the market if I think of the market in this manner? So you then have your cropping calendar, right? So why do we have to understand the cropping calendar? The cropping calendar is important because these are agricultural commodities, and typically Nigeria follows a monoproduction season, such that you produce during monoseasonal production practice. So that means that you produce during a period and then you consume during the other period. What that means is that if you don't produce enough during that production period, you would have a deficit for the rest of the year. So this is why we need to understand, one reason why we need to understand the cropping calendar. Another reason we need to understand the cropping calendar is to be able to say, okay, this is when this commodity is coming into the market. This is when this commodity will be available for us to buy in the market. And that affects the supply of commodities generally. So for instance, we have our maize, soybeans, paddy rice, and sorghum here, for instance. There are so many other commodities that are not captured here. You still have your cocoa, your sesame. But then let's look at these four commodities, for instance. You typically have maize. So the green represents the planting period, the yellow represents the harvest period. So you have planting for maize going from April to somewhere around the planting season going from April to August in some places, and in some other places in the country, you have it going from April to September. So that affects the thinking around your production. You typically then have a situation where during that period of time, there are no new maize coming into the market from the production end. Everybody is still in the production process. So that is what is going on at that point in time. Then during September and October, the harvest happen, right? Farmers go to their farms and they harvest the commodities. The same thing applies for soybeans from maize till around September. Harvest happens October, November, thereabouts. But and then you have for sorghum from June, there's a late sorghum is planted later. So you have from June till around October as well. It's harvested November, December during the year. But for paddy rice, you have two seasons in Nigeria. So you have the wet season running from June to October, and then farmers harvest November, December. And then you have the dry season running from around December in some places, January through March. And then farmers harvest around April and May. What is this telling us? This is letting us know when the commodities will be available in surplus in the system, and when they will be available in deficit in the system. What this means is that if we don't plant at the right time during the production season, if we don't produce well enough during the production season, if we have the climate affecting, the weather affecting production during the production season, we can say confidently that all through the rest of the year, the commodities will not be enough for the system. So we then have to think of how best to bring more commodities into the system. So having understood what the cropping calendar means, and then the the effects on production and consumption in the system, you then want to look at what we call price movements and market timing. Don't forget, this conversation is still surrounds the question of how do I enter the market. So first, when the commodities enter the market themselves, when the commodities are available, and then you will now want to ask yourself, so at what price is best for me to enter the market? So because we have this one season production, we produce during the wet season and then we consume during the rest of the year, you have a situation where prices are at their lowest during harvest. So prices follow a linear trend. So during harvest, the prices are lowest and then they go up from there all through the season. And that's what we call a seasonal price cycle because of the season, right? Production versus non-production season. So prices move from out around harvest and they typically go up during the year. The second, which then gives us the opportunity for the second thing about how to enter the market, which makes the importance, which brings about the importance of market timing. So you want to enter the market, you have the idea that number one, there's a cropping cycle. Number two, there's a seasonal price movement, right? So that gives you an idea that if I want to time the market, I should time the market towards harvest, right? When the prices are lowest, and then I buy the commodities, and I watch the commodity prices rally over the course of the year. So that is one. The second thing this graph also shows us is that during the course of the season, there are movements in prices up and down. And if you look at, let me annotate something here. If you look at this part of the graph, right, you will realize that the prices fall during this part. But then if you are following the market, you are conversant with the market, you'll be able to say this is a good time for me to enter the market because you must have done your research. You've confirmed that probably we are in a deficit or we are in a surplus or the policy is in your favor, or you realize that the weather condition during the production season was not enough. So as a result of that, you just take the decision to buy. So if anybody had bought at this price, at this low price here, even though it seems like he's buying within the season, during the season, there's the investment decision is going to reap some profit because look at the movement we then saw after that. So the prices then went up thereafter and he was able to make some money. So even though prices are their lowest during harvest, we still have intra-season movement that allow investors to make some money as the prices go up. So that's one thing that we should also know. So number one, in entering the market, you think about the cropping cycle and how that affects prices, how that affects price movements. And then one thing that you should also pay attention to is market timing. Having done your research, you are able to say, okay, based on the research I've done, I think prices of maize will go up, notwithstanding whatever the prices are doing now. I think the prices will go up, and then you buy and then watch the price rally as the case may be. So moving forward, right? So moving forward, you also have you then think of the information sources you have, right? You think of how best to study the market and know when to buy or not. So there are various information sources in the market. You have the periodic reports that FX publish, and that's available on fxnigeria.com. There are a number of other third-party information sources within Nigeria, a number of them, Kainos Edge, ProShare, Nairametrics. These information sources, they provide information on commodities. And then you have the global information sources. You have your Bloomberg, you have your Reuters, you have your CNBC. These information sources, they provide information that are critical in monitoring this market. So first, you are monitoring the domestic commodities market, which is what we have in Nigeria. And then you are saying, so what is maize? What is the performance of maize so far? And what are the drivers? So you read your effects report, you go further to do third party, to check third party sources, you check the global conditions to see if it's just a thing in Nigeria or globally. And these are the information sources that you typically review in entering the market. So there are three key points I've mentioned now. So you have your cropping cycle, which is critical. You have your market timing and price movement monitoring. And then you have your information sources. Don't forget, in order to time the market, you have to use your information sources to gauge what the market is saying in order to do your research. So moving forward, you then have the trading psychology, right? So we've done a lot of conversations. We've made statements around the drivers of the market, the how to enter the market. But then every trader, every investor in this market need to have some understanding of what drives their decisions, right? So you have the emotional intelligence that every trader is supposed to have. No matter what is happening in the market, you have your own position. You've done your research and you think your position is valid, then you should be confident enough to say, this is my decision, rather than just following the herd and doing whatever every other person is doing. Another thing is to set the rules for yourself. You also have to understand that there's never too much. There can be a case of being too optimistic and being too pessimistic. So regardless of how confident you are, you have to set certain rules. This is your objective. This is how much you intend to make in the market, and this is how much loss you can incur. So imagine if prices are going down by 5%. If it's within your rules that I can take a 5% loss, then that's fine. If prices go to 10%, then somebody that sets a rule of 5% loss cannot take any decision. You have to exit the market dependent on the rules you set. You also need to understand the risk reward profile of what you are going into. So, for instance, in this case, you know, prices can go up or down, and then you realize that the downward, prices going down is a risk. You have to understand that, and then prices going up is a reward for you. So you need to balance these two concepts, the risk and reward, and be able to say, this is what I need to do at this point and make my investment decision. So let's look at it holistically now from all what we've said. So first, we talked through the drivers in the market, right? We looked at the key drivers, which we said are the demand supply fundamentals, the climatic condition or the weather situation. We've looked at also the policies in the space, the economic policy, and we've looked at the macroeconomic conditions. So you have your inflation, your exchange rates, and the likes. So we've looked at that. These are key drivers. We also looked at how to enter the market. So we then said, you know, the cropping cycle, when best to buy and time the market. So market timing, price movement, cropping cycles. We've discussed all of this. Now let's bring all of them together using a case study of maize for the 2019-2020 marketing year. And permit me to describe what a marketing year means here. So a marketing year is from the harvest in 2019 to the next harvest in 2020. So if the harvest which we've seen in Nigeria is around October, November, and the harvest for the next year is October, November, that's like a 12-year cycle for you. So yeah, look, that is what you mean by your 2019-2020 marketing year. You are going from the harvest for 2019 to the time when the harvest for 2020 will be starting. So if you then look at what happened in 2019-2020, you would see that the season started at this price around, and this is our index here in FX Commodities Exchange. This captures the maize index, right? Season started at around 120, 130, 135, if I'm not mistaken. And then the prices went up from there, up until this point where prices were around 210, 250 thereabouts as well. So that means during the 2019-2020 year, there was a significant rally in prices, and prices went up significantly. But then let's look at all the drivers, the macroeconomic conditions, the market timing, and let's use that to think about this market. So we are looking back now, we are saying what happened and how would I have thought about this market during this period. So look at the inflation. Inflation was 11.85% versus 11.53% in the previous season. Exchange rate was 345 naira based on the CBN, and this was fetched from the CBN website. Average exchange rate actually over the course of the season versus 306 thereabouts in the previous season. And then we had a deficit of about 1.5 million metric tons, depending on the data source you check. You have that deficit in the system. So that means that you already have the conditions, the drivers that will push prices upward. And then you look at, so you have your key drivers checked. You've ticked that box. You've checked your key drivers. Then you come into the cropping cycles. You've also seen the cropping cycle. You are coming to November and you want to take your position. The next thing you then begin to say is, so based on the research I've done, can I time the market and come in at this point in time? And from this graph, if you had come in at the entry points, which is the start of the season, and you had stayed till the end of the season, you would have made some money. But also you could have come in anytime within this period. You could have come in anytime within this period and still make some money, which is what we say by saying in timing the market as well. It's not compulsory you come in at the beginning of the season. Not everybody will be able to get in at the beginning of the season, depending on whatever conditions occur to each person. But then you are able to do your research and you're able to back up your research with facts and say, at this point, I think the market still has some upside, still has some money, I can still make some money, and then you enter the market. Or you say, at this point, I think the market will lose some money, and then you don't enter. So imagine if somebody had come into this market. Give me a second. Imagine if somebody had come into this market at this point, at the top here. Hold on. Trying to get this annotation right. I guess this stuff, it's not clear here, so I'm having some issues. So imagine if someone had come in at this point, at the top here, and then the market falls, and then the prices decline. So the person could have thought, okay, I think based on what is happening in the market now, prices will still fall further, and then the person waits until the prices are good enough. The person waits until this time before the person comes back into the market. All in all, what I'm trying to say is, all through the season, you still have to do your research and back up your decision with the right information. So if you bring it together using this scenario, so you have the prices being low at the beginning of the season, prices being at the highest point at the end of the season, inflation was higher, exchange rate is higher, and we are in a deficit situation, and then that's the ripe condition for prices to go up. And then you take note of the intra-season movement in timing the market as well. So in thinking about how to trade commodities smartly, you need to think about the key drivers, which are critical. You have your macroeconomic conditions, you have your policies, you have your you have your climatic weather situation, and you have your demand supply fundamentals. So these are key drivers. Then you go on to say, what is the cropping cycle? Am I buying based on the cropping cycle? Am I buying at a good price? Based on the cropping cycle, am I buying at a wrong price? So you look at that as well. Then you look at the price movements within the season and say, based on my research, I think these prices will still go up and there's still enough room for me to make some money in this market. Then you take your decision as to buying or selling, right? So based on all of this, I think we can think through our decision system, how to trade in the commodities market, and be clear and know that I'm making some money, or I shouldn't buy at this point in time, because I might be losing some money. Thank you very much. This is a short and concise to guide our thinking about the commodities market. Thank you.
Okay, thank you very much for that, Yusuf. That was a very educative one. We already have some questions in the comment section, which I'll be reading out pretty soon. And if for the people, for the attendees, if you have any questions, please feel free to drop the questions. We're about to go into the question and answer session of the webinar. I'm going to start from this question here. Someone is asking, and that's for you, Yusuf. Is the beginning of the season the beginning of the planting season? I guess it's based on the graph that you earlier showed for the maize cropping calendar.
Do you want to take that again? I didn't get your question well.
Okay, so this person is asking, is the beginning of the season the beginning of the planting season? I think you might want to go back to that graph where you showed the price chart for maize from 2019.
So what you have here, like I explained earlier, the season starts, the marketing year starts from the beginning of harvest period. So you have harvest typically around November in Nigeria, and then that's when we think the marketing year should start. Because if you look at the core definition of marketing year, it means when you have the commodities to sell. And then if you want to look at it clearly, logically, you say you have the commodities to sell at from the beginning of harvest, right? And I think that's how best to think of the marketing year. So the beginning of the marketing the season is typically when harvest starts. And based on our own systems, based on our own methodologies, we've taken November 1st as the beginning of November as the beginning of the marketing year.
Okay, thanks for that. I hope that answers your question, Mr. Okuchukwu. Someone else is asking here, how many crops or commodities do we trade on? I'm guessing he's asking how many commodities do we have currently on the COMEX platform?
Currently, I think we have up to 6 commodities. We have maize, soybeans, paddy rice, sorghum, cocoa, and cashew. So the way the exchange does is to expand the array of the commodities available as we also develop the operational infrastructure to back them up. So at the moment we have these 6, and then I'm sure we'll be expanding by the time the next season is starting as well.
Yeah, I hope that answers your question, Mr. Adiremi. We have another question here. Apparently, I think this person traded our ETC. So he or she is asking, how do we know when FX opens up commodity for trading on COMEX? And the second part of the question is, I tried selling my fair trade ETC at some point, and I was told I cannot until a specific time of the year.
So based on the design of the ETC, it's currently designed to be held for a period of time, because you understand the ETC is a new product that we're bringing to the market. We need investors to get accustomed to the structure of the ETC before we open it up for trading in the system. So what we've done is to say your ETC has the opportunity to gain this so amount. I think the ETC has gained up to about 40% already, if I'm not mistaken, this season alone. And that means that there's a lot of opportunities for people. So people can't sell the ETC, but they can buy from the issuer, the manager. They can buy and hold till the end of the period. So the price the ETC will be bought back will be the price on that final day, not the price on the initial day. So imagine the ETC opened at 10,000. Imagine somebody that bought the ETC at 10,000 and is holding up till now at about 14,000 naira or thereabouts. That person has gained 40% already. So at the time of sale, the price will be, imagine if it's bought back from that investor today, it will be bought back at 14,000 naira, making the investor gain about 40%. So it's not tradable as we speak, and we are building the infrastructure to allow investors understand the process better and then be able to trade it between and amongst themselves.
Thank you for that, Yusuf. I hope that answers your question. So Yusuf is asking here that he's saying that he's quite new to commodities exchange. That is there a platform where he can go to analyze commodity prices?
So as an investor, you have a lot of information at your disposal. So visit fxnigeria.com. You have weekly reports, monthly reports, commodities focus reports, annual commodities reports, a whole lot of reports that you can read to bring your knowledge up to speed about the commodities market here in Nigeria, and then the commodities ecosystem as developed by FX. So that gives you a lot of room to build knowledge based on the ecosystem as well. So visit fxnigeria.com and you get a lot of information.
All right. In the comment section, yeah, there happens to be some a conversation. I think basically disparities in cropping calendars. Some people are saying that this commodity has this harvest period. Some are saying otherwise. So I would like you to speak on that, based on the fact that COMEX by FX is a commodities trading platform. So how do our investors get access to the cropping calendar that we use on our platform?
So for investors, what is most paramount is when the commodities are being issued. All right. So what you would want to think of is, based on the cropping cycle that we've looked at, and if you look across a whole lot of technical and non-technical reports, you would find one or two disparities between one report to the other. And that's because there are what we call staggered planting across the country. But then, even with this staggering in planting, we still have some sense of uniformity about how we think about planting generally for any commodity in Nigeria. So based on what we look at here in FX, on the FX Commodities Exchange, we think November is a good season start period, because notwithstanding whatever situation we are faced with during the production season, typically you have harvest coming to the market in November. And that's what we think we should begin to look at, right? So standardization of all cropping cycles, all cropping calendars across board might not be possible. But then what we think we should begin to look at is the beginning of the marketing year as captured on the commodities exchange.
Thank you very much for that, Yusuf. And I hope that answers the conversation that is currently happening on our comment section right now. So Abdullah here is asking, how can a commodity investor maintain and sustain high and low prices during high inflation, especially on paddy rice?
So first of all, I guess there's a generic answer to all commodities, and then there's a specific answer to paddy rice specifically. So the first one is market timing is critical, but then there's a popular saying by investors that you cannot always time the market perfectly all the time, right? So investors should be very particular about their research and knowing when to enter the market. That is how the best of investors buy any assets of any type, and then they make their money off these investments, right? The second thing is So what applies to paddy rice? If you realize from what we showed earlier, paddy has 2 seasons. So that means that within a year, paddy is produced twice in Nigeria. So just like you are monitoring the reports to know when to buy and sell for paddy, you should know that you will be monitoring the production progress. Of course, reports will also be showing that you'll be monitoring the production progress to say, at this point, we are entering into the next production season, and there's a likelihood that another set of paddy rice will come into the market, which will affect your own prices as well. So you also need to do all these reports, monitor these reports, and know when best to enter and exit the market. So that's the way I would typically look at it.
Thank you for that. I hope that answers your question, Abdullahi. We have another question here from Taiwo. He's asking, what is the ROI if I invest, and what are the maturity periods?
So for spot contracts, so there are a number of instruments on FX Commodities Exchange. One of which is what we call spot contracts. A number of them. So you have the spot contracts, you have the input notes. So let me just put it generally. So you have your contracts, spot contracts, that the prices fluctuate from day to day depending on the market condition. And then you have your fixed income commodity linked contracts that are guaranteed. The returns are guaranteed, and the returns could vary from 10% per annum to 18% per annum, depending on what the market condition is also saying. But for the spot contracts, those ones, for this particular type of contracts, their prices move on a day-to-day basis. So the ROI for this one that we've seen in the last 3 to 5 years, if I'm not mistaken, the last 3 years have been fantastic for investors. Prices, ROI in the last 3 years have averaged 40%, if I'm not mistaken. In the 2 years before then, you have ROI averaging 19-20% per annum, depending on the commodity, depending on the contract you buy. So you have a range, right? Depending on the risk appetite the investor has. And don't forget, the spot contracts are the most risky because you have a risk of price going down. But then on this fixed income commodity linked instruments, you don't have the risk of prices going down. You just have a guaranteed price. But then on the way it on a reward basis, ROI basis, you can earn more on the spot contracts than you can earn on these other instruments.
Thank you for that, Yusuf. There's a question here, and I think I'll just take that question. Adorami is saying here that I have the COMEX app, but I don't know how to go about buying and selling these commodities. I do physical trading of commodities, but I don't know how COMEX works. So I'm not sure if you're talking about the platform itself or commodity trading itself, but if it's the platform, we actually have videos on our YouTube page, COMEX by FX, that talks a lot about how to make use of our platform. But if you want a one-on-one like say coaching, I'll be sharing our Telegram link group so you can join, and then we can attend to you specifically, because we can't currently do an app demo at the moment. I hope that's okay, Mr. Aderemi. We're willing to help you so you could get to know or use our app even much better. Right now we seem not to have any more questions. As again, I'm still encouraging more of our attendees to drop your questions. We are more than happy to clarify on some of the questions that you might have. And while we are waiting for more questions, we're just going to play some short videos that talk.
Chisom, before we go for the short
shed more light. Yeah.
I think somebody is asking what about cocoa trading here. So So we have cocoa being traded on the platform as of today. So there's cocoa on the system already, on COMEX already.
Okay, I must have missed that question. So if you're looking to trade cocoa, like Yusuf has said, we currently have that on the platform, so you can go ahead and check it out. So we're going to just take a short break, and while we show you some videos that shed more light on what COMEX is trying to achieve and effects as well as a whole. Okay, yes, once again, thank you all for taking out time to join this webinar. If you can see in the chat box, I have actually attached a link to our Telegram group. Please, if you have further questions to ask in the nearest future, you can always drop a question in the Telegram group and be rest assured that your questions will be answered. I will also be dropping the link of our YouTube page so that you can also have access to our numerous educational videos that are currently on our page. We answer a lot of questions, and I'll drop that link in a bit. Okay, someone is asking, okay, looks like the questions are coming in now. Hold on. Ade Folarin is asking, can we have a program like this done quarterly to connect with investors or maybe to address questions or queries? Of course, Ade Folarin, we usually actually have monthly webinars like this. We do webinars like this on a monthly basis. So please always feel free to join our webinars. We always send out emails long before we actually hold our webinars. So we already have that in place. Okay, we've also sent in our link to our YouTube video. We have tons of educational videos for you. If you have any questions, you're most likely going to get your questions answered with one of these videos. Okay, there's another question here from Jonathan. He's asking, said, I want to ask, which acceptable preservation method do you recommend, knowing fully well that the quality of commodities depreciates with time? Does Apex accept products preserved with chemicals? Yusuf, over to you. I think he's talking more on the physicals.
Yeah, you're right. Thank you, Mr. Jonathan. And what we do here in FX is a commodities exchange first. So regulated by the Securities and Exchange Commission. And that mandates that there is what we call the integrity of the commodity. So the integrity of the commodity, whether it's the quantity, whether it's the quality, is kept intact, leveraging on something we call collateral management. So there are two questions in what you are asking, right? So the first question is, do we take care of the commodities, maintaining their integrity? Yes. The second question is, do you then preserve with chemicals? That's the second question, right? And then also bringing us back to this regulation, right? The regulation also limits the kind of preservatives you can use, or the kind of commodity, how you can protect or preserve the commodities. Number one, you don't go beyond some moisture levels. You don't go beyond some foreign matter level, extraneous matter levels. So these are extra ways to preserve the quality of the commodities. And then just to remind us, to bring it to our notice that the spot contracts that I'm talking about, that they are backed by commodities, on the COMEX, what you are trading is what we call financial security. So you are trading a security between and amongst investors. You are not exchanging the commodity, so to say. You are not giving someone else your commodity. You are exchanging title to ownership to that commodity. So that means that, number one, you don't go to, it's not as if each investor will then take ownership, will then take possession of the commodity, and then when they want to sell, they bring it back. No, the commodities are domiciled in accredited warehouses that are confirmed by the exchange, by the collateral manager, by the commission, and then these commodities serve as the back end, as the asset, underlying asset for all the spot contracts that are traded. So just to answer your question, there are standards that are set in place, and these standards allow us to preserve the commodities properly and adequately.
Yes, thank you very much for that, Yusuf. Okay, there's one last question which I'm going to take before we call it a wrap. Musa is asking if we're going to get, okay, can we get the recorded version of this session? Definitely. This session is currently streaming live on our Apex YouTube page, so we can always access that. We can also send the link in the chat box. So once again, I want to thank you all for joining this webinar, and we promise to continuously have monthly educational webinars like this. And yes, we're going to play some of the educative videos that we talked about that are currently on our YouTube channel. Can stay tuned. Thank you very much.
Understanding the commodity market is easy. Commodities are raw materials that are used to produce finished goods, such as agricultural products, energy, mineral, and so on. Commodity trading is simply buying and selling these commodities anytime, anywhere, and you can do that on COMEX. You simply buy from a seller in the market or sell to a buyer in the market. And shikena, you've traded commodities.
The coolest way to trade.
All you need to know to make money on COMEX. One, buy into the products immediately they are launched and when their prices are at the lowest. Two, keep updated with our commodities prices through our weekly reports on our website and our trading platform. Three, have an understanding of your risk appetite and a thorough knowledge of what you're investing into. And before I forget, You can communicate with one of our customer fulfillment experts on our website and social media platforms below.
The coolest way to trade.
Spot commodity. Spot commodity is a product wherein an investor buys commodities through a contract in order to benefit from price appreciation in the marketplace over a period of time. This class of product provides an opportunity for capital appreciation as investors aim to buy low and sell high. This product class also avails investors an alternative asset class with a natural edge against inflation and foreign exchange rate devaluation. For instance, if you as an investor had bought maize at the beginning of harvest season, there's every possibility that your capital would have appreciated by approximately 20 to 30% as of today. That's capital appreciation that you see in the commodities market that you don't see on any other type of asset class.
Thank you all once again for joining. Thank you and enjoy the rest of your day.
Bye, everyone.